Morning students. Today we are going to discuss the treatment of stock in inventories and other adjustments related to cost sheet. Right now on your screen the adjustment related to stock or inventories are there. When opening stock of raw material, purchase of raw material and closing stock of raw material are given, raw material consumed can be calculated with the following table. With the opening stock of raw material, we have to add the additional purchase of raw material. Carriage inwards we have to add. Other direct material consumed we have to add. And if you pay any taxes on purchase of raw material or duty paid while importing the raw materials, you have to add. And you have to deduct the closing stock. You have to deduct the sale of unusable materials, raw materials, and sale of scrap. After that we get the cost of raw material consumed. With this we'll be adding the direct wages and direct expenses to derive the prime cost. This is the first adjustment. Second adjustment related to work in progress. Work in progress means unit of production on which work has been done but not yet completely finished. That is, production is under process. So work in progress is valued on the prime cost or work cost basis, but usually it will be valued in the factory cost or work cost. The opening and closing work in progress will be given. So with that we have to add the opening work in progress and deduct the closing work in progress with the factory overheads, works overheads, or with the manufacturing overheads. Right? The last final adjustment in the cost sheet related to finished goods. And similarly here also opening finished goods and closing finished goods will be given. They are to be adjusted to find out the cost of production, that is during the cost of production, that is office and administrative expenses, office and administrative overheads to be added along with the work cost or factory cost or manufacturing cost to derive the cost of production. After getting the cost of production, we'll be adding the opening stock of finished goods and deducting the closing stock of finished goods to get cost of production of goods sold. That is, previous one we called as a gross and this one we call as a net. Right? These are the few adjustments that come under the cost sheet. Let us go to the problem. Here right now which you are seeing is a problem. The following costs are available from the books for the year ended 31/12/95. Direct material given, direct wages given, profit is given, selling and administrative overheads given, selling and distribution overheads given, administrative overheads given, factory overheads given. Prepare a cost sheet indicating the prime cost, work cost, production cost, cost of sales, and sales value. And for this we have to prepare a cost sheet to find out the above particulars given. Now, as you all aware, the cost sheet format and how to prepare it. The first part is prime cost. In the prime cost, we have to take the direct material, direct wages, and direct expenses. In this question, direct expenses is not given, so only direct material, direct wages, 9 lakhs and 7 lakhs 50,000. Now, in the solution part, if you see direct material 9 lakh, wages 7 lakh 50,000, prime cost comes around 16 lakh 50,000. Now with that, we'll add the factory overheads, or works overheads, or manufacturing overheads. Here it is directly given factory overheads 4 lakh 50,000. Add this 4 lakh 50,000 with the 16 lakh 50,000 to get the factory cost, work cost, or manufacturing cost. Again I repeat, factory cost is also called as works cost, or manufacturing cost. Even it will be called as a production cost. Now it comes around 21 lakhs. Add office and administrative expenses, or office and administrative overheads. Again it is given, and the name of administrative overheads of 4 lakhs 20,000. Now 4 lakhs 20,000 added with the 21 lakhs, that is, it comes around 25 lakhs 20,000 as the cost of production. With that, we'll add the selling and distribution overheads. Selling and distribution overheads, it is given here 5 lakhs 25,000. So add this 5 lakhs 25,000 to derive the cost of sales. It comes around 30 lakhs 45,000. And in the question, profit is given 6 lakhs 9,000. So with the cost of sales, we have to add the profit. Cost of sales is 30 lakhs 45,000. With that, we'll add the profit 6 lakhs 9,000 to get the sales of 36 lakhs 54,000. Again I repeat, here we have direct material, direct wages. We'll add direct expenses, not given in the question, so we add these two to get the prime cost. Actually we'll add direct material, direct wages, direct expenses. Since direct expenses is not given in that particular question, so it is considered as a nil, and if you add these, we'll get a prime cost. With the prime cost, we'll add the factory cost to get the factory overheads. We'll add to get the factory cost, works cost, or manufacturing cost. With that, we'll add the office and administrative overheads to get the cost of production. So cost of production, after getting the cost of production, we'll add the selling and distribution overheads to get the cost of sales. So selling and distribution overheads is 5 lakh 25,000 and the cost of sales is 30 lakhs 45,000. Then the profit is given, so we'll add the profit to get the sales. So adding the profit, we got the sales. 36 lakhs 54,000 is the answer. I hope you have understood the question, and we'll see you in the next class. If you like